Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, October 6th, 2009. Well folks, we're seeing another up day on Wall Street, although we have started to roll over here as the dollar has gained a little strength. Now the amazing thing about today is this. Over the last few days, basically going back to last Friday, the master level was hit at 102. We know what that means. The last time the master level was hit, which was one step higher at 104, you had a $3 bounce on the SPY. Master level gets hit on Friday. What happens? We have a $4 bounce from 102 to 106. So we're talking about huge bounces off these master levels. You have to catch them, folks. They're that dramatic. Now we played Qualcomm to the long side. We played some other stuff to the long side. Obviously, we put out the new Hidden Gems report, which has been just unbelievable over the last 6 months in 100%, 500% increments of increases in the stocks on the Hidden Gem. But bottom line is this, folks. You're seeing the bounce in the market. Then at this point today, folks, right up here, I said to my chat room today, and I posted it on the Pro Trader watch list, which is part of the Research Center. If you want to just join the Research Center, we talked about starting to accumulate short positions again. And I picked up a little SRS, I picked up a little more FAZ right at that high, and now we're in the money, very, very flush. Beautiful money, profitable trades right now as this market has started to roll over. Really important to understand what's going on here. You got to read the technicals. There's a specific reason why I picked the highs on this market to look for some shorting opportunities. All right, now that's again in place. Now we're talking about SRS. Now I may unload the SRS before the end of the day. Look at this move. This is where I picked it up, guys. Right down here. Now, why? Why did I do it there? What was telling me that? It's all technicals, price, pattern, and time. Know your levels, know your indicators, know your cycle work, understand price, pattern, and time, and look at the move on the SRS as I'm riding this baby up. Beautiful profits, great for the chat room as I gave the alert when I bought it, put it on the Pro Trader watch list when I bought it as well, for our premium subscribers to isolate and play as well if they so choose. Now again, the FAZ, same thing. FAZ, picked this thing up beautifully here earlier, and look at the move you're starting to get on this FAZ. That's the 3 times short, the financial players there, all right? Now, the key here, folks, is this. The market is soaring today. We've had a big up day, and I'm going to go into that. The Dow up 128 still on the day. The NASDAQ up 33, and the S&P 500 still up 14, and that's all on the back of a weaker dollar. So the dollar had really been crushed all day long. In fact, going to a double bottom. This is the beauty of this dollar play. Look at this. Look at the dollar gapping down, and look at the selling. That's coinciding beautifully with the move up. So look at this right here. Dollar goes like this. What does the market do? Let's go back to the SPY. Here's the market. Notice the time frame. Dollar tops out, or market tops out right up here, right around the, let's see what time that was. That was right around 10:45, 11 o'clock. Let's take a look at the UUP. Where does the UUP top out? Right here. Here's 10:45, 11 o'clock. That's when the UUP bottoms out. And this is the dollar index. So remember, the markets are moving inverse. What has happened? The market has started to roll over. Why? Because the dollar has begun to gain traction here, guys. That's the bottom line. Now, there's been some other key catalysts, and I'll show you what they are. Number one, just a little bit before lunch, around 11:30, 11:25, we talked in the chat room about Goldman Sachs. Goldman Sachs started to look very, very weak. We started to see good technical indicators that Goldman might be coming down. Look at what has happened to Goldman Sachs here. Look at this fall on Goldman. Look at this beautiful bear flag pattern right along in spirit of bear flag along the 20. Look at the rollover, and now you're actually getting a bounce. Notice how the dollar was ticking down 1 penny there, and the bounce is coming in. So you're getting also a very, very key level. Also, on a technical basis, look at where this bounce came in. All right, look at this. See the high right here? From this high pivot here, and then this low into the close tail, and where do we go? Right into that area. So you can see there's technical reasons for everything out there. All right. Again, nice bounce on Goldman, but you should be hitting a little bit of resistance right here on the charts at the 50 moving average coming in. Goldman is negative on the day after being as high as 189.44. That was a new 52-week high hit on Goldman Sachs. Beautiful rollover, guys. That is just a fantastic rollover on Goldman. The key is you have to see more and more of a rollover on Goldman and on JP Morgan. JP Morgan's had a small dip, but it's still up 75 cents. JP Morgan has been a monster over the last day or so. Yesterday, really having an unbelievable move. And that's the bottom line, folks. It's all about understanding the keys here, understanding and just continue to make money. I don't care if the market goes up or down. All I want to do is be on the right side of the trade. I'll swing it a few days here. I'll swing it a few days there, just like we were short going into that Friday session. Once we hit the master level, then you go long. Then once you get up in these ranges, you hit some master levels and some key levels, and you look to go short again in the markets. And that's the bottom line. Here's your 60-minute chart, folks. There's a key level on this chart that basically alerted us to be on that side of the trade. And again, you can see it right here. You connect these lows. In fact, I'll go even more so on the charts of the SPY. Let me flip back to the SPY and show you. Here it is perfectly. See this blue trend line? This blue trend line extends all the way back to the lows that were hit at 99.50 to 100, the biggest pullback we had right down here. That's where you start that blue line. And again, this is exactly why I was able to give the alert to those of us that were in the premium services and the chat room and the research center and all that to go short. Because look at this. Connect it through there, connect it right through here, and what happens? We retest that back line, which was a key breakdown. This was a key breakdown here. We go back up, retest that line. Look at that blue line get touched, literally kissed, and then the market starts to fall, and that's where you had to be short right there at that point. And again, taking the SRS there, the FAZ on that high points around that high point as well, and that's what you really have to do, folks. It's all about understanding that. Then you want to take some off the table, and then you can play around. And it's a, in the money stop or break even stop, and it's a money trade. You're not going to lose on the trade with a flat break even stop at this point, and that's how you just can run that way and utilize the market and work to your advantage. There's no reason why anyone should be doing anything other than paying attention to price pattern and time and just utilizing it to make money. That's the bottom line, folks. I mean, it's just that simple. Look at the charts. The charts told us. Blue line, retest after this major breakdown from this triangle. See the triangle right here? You broke down out of that triangle. When you retest that back line, there it is. You got to get the alerts, folks. The bottom line, the alerts are right there. That's where you got to be looking to short the market. And sure enough, you can see, look at the beautiful rollover we had off of that high as the market came in. We've showed you Goldman Sachs. ExxonMobil has been extremely powerful today, although that has come in a little bit as well. A little bit of an in-spirit of bear flag on this Exxon chart as well that you're looking at right now. That may mean a little more downside later, but I think, to be honest, it's all about the dollar. I mean, this is the dollar chart. Here's the UUP. You can see we're hovering just near the high points of the early afternoon session here after a dip, flat, and then up. And you can see the market's going the exact opposite of that pattern. Understand this stuff, folks. Join the research center. Join the chat room. We'll go over the intraday levels quickly before we head off on this. But again, you're going to have a little resistance at this green trend line in the 20 moving average. That's right at 105.70 to 75 level. If you get above that, you're going to have a little pivot high right here. That'll be minor resistance at 105.95. And then ultimately at 106.10. Those will be the spots to watch right now, all right? So keep an eye on those. You want to follow them. You want to know them. On the way down, you'll have support at the blue trend line, which is what we came down to there. That's at 105.35. If you get through that, you could fall all the way to gap window in the 50 moving average down here at approximately 104.75, 104.70 down in this range. All right, those are your levels to watch in the afternoon. Again, you got to understand the technicals, price pattern, and time. I'm not talking about stochastics and MACD and all that junk. I throw that right out the window. You want to understand price pattern and time. That's it. All right, come join us. We'll see you in the Research Center for the nightly 40-minute video tonight as I dissect and give you guys new plays for tomorrow. We'll talk to you then. Take care.